Hello everyone. The RBI announced the second MPC for FY 25-26. The policy was clearly outright dovish surprise. Let me quote the foreword of the governor's speech. Keeping Viksit Bharat vision in mind that we aspire for higher growth rate, given that we have increased confidence that inflation is likely to stabilize at 4%. The following actions were taken. They've cut repo rate by 50 basis points, higher than our expectations. Repo rate now stands at 5.5%, closer to our terminal rate call. RBI has front-loaded monetary easing to support growth. They've cut CRR by 100 basis points starting September 25. This was a complete surprise as core liquidity was already upwards of 5.5 lakh crores. However, as we have FX swaps maturity in August 24, GSEC holding with RBI, currency leakage which could reduce the core liquidity. The CRR cut would infuse 2.5 lakh crore to core liquidity. This would ensure core liquidity in the system remains in excess of 4 to 5 lakh crore for most of FY 25-26, helping achieving the transmission of rates. We should also see further the MPC decided to change the stance from accommodative to neutral, suggesting rate cuts are likely to be data dependent. RBI has revised inflation target lower to 370. Growth target has been kept unchanged at 6.5. If growth significantly is lower than RBI expectation in FY 26, then we may see incremental rate cuts. Let us see the impact on the yield curve. Short-term curve up to 1 year fell down by 20-25 basis point. 1 to 5 year yield fell down by 10 to 15 basis point, while the 10-year yield went up, 10-year and above yield went up by 3 to 5 basis point. The yield curve has got steeper. 10-year over next few months is likely to trade in the range of 6 to 630. Given the steeper curve, mid to long end of the curve offer value. Larger gains are likely to come from the carry for the investors, and the investors should continue to select fund based on their time horizon. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.